And welcome to this episode of the Capitalized Life and Retirement Show. I'm your host, Matthew Johnson, president and owner of Johnson Wealth and Income Management, a retirement income source located in Clear Lake and Humboldt, Iowa, serving clients in northern Iowa and southern Minnesota. Well, how are you? Hope you're doing well. Hope you're taking a little bit of time for yourself today. Thank you for clicking on today's video. Thank you for clicking on today's podcast. Today, I want to have a special discussion, quick but very, very clear, with that of business owners. Now, if you're not a business owner, it doesn't mean that you can't enjoy listening to this topic and learning something. But the reality is that there are certain things in this world, financially speaking, that apply to business owners that do not apply for those that work for business owners. And one of the things that I've maintained for years and years and years is the fact that we have bought this whole package deal that depositing money into pretax accounts, it could be a 401k, it could be a SEP IRA, it could be a SIMPLE IRA, it could be a traditional IRA. And there's a whole host of other types of accounts that exist out there that are pre-tax. But those are accounts that we should be just pouring all of our money into. Now, although there is some very specific, very clear benefits that, well, they really do benefit us. We're able to funnel these dollars that we're making from our paycheck and from the wages that our business is paying us. And this does apply to all of you that may be working for a business. And guess what? Those are dollars that if you've deferred them into that 401k or that SEP or that SIMPLE, you're not going to end up having to pay any income tax on that money because it's disappeared according to the IRS. It has disappeared from their view. Now, trust me when I tell you that it has not officially disappeared. You see, the government would rather go ahead and tax the crop than it would to tax the seed. And so they incentivize us through this tax deduction to deposit money pay period after pay period, month after month, year after year, and many of us do it. We do it because we simply buy into this idea that later on in our life, after we have retired, our income's going to come down. And maybe we were in the 24% tax bracket when we were working. And now that we're retired, now that our income has decreased, well, now we're in a position where going forward, we will be able to pay 12% on those withdrawals. Sounds like a pretty good deal. You don't have to pay 24% tax on it. And when you take it out, you pay half that tax instead of the full 24. What could be wrong? Well, the answer is there's nothing wrong with that. If that actually works for you, that's great. However, what I find is that quite honestly, those of us that are good savers, those of us that try to live within our means, we try to save as much as we possibly can. If we have made good investment choices, and that money has grown, it has compounded, and we have grown accustomed to a lifestyle, we've grown accustomed to, say, a standard of living, and we want to maintain that, not just simply when we were working, but now that we're retired, we want to continue to take those trips and enjoy having a deck, and we want to be able to go fishing when we want to. Well, all of those things are likely going to require income. And whether you're producing the income the right way through interest and dividends off from your principal, or you're creating income and engineering it by taking withdrawals and selling your principal, the concept is still the same. You may be in a position where even though you drank the Kool-Aid of the government that says, hey, you can defer paying taxes because you're here, and when you retire, you'll only pay us this amount. But for most Americans, that's not the case. For most Americans, you might be in the 24% tax bracket or even in the 22% tax bracket, the next rung down. And when you retire, guess what? Because you have your Social Security, you have withdrawals that you're making to maintain your lifestyle, maintain your standard of living, well, let's just face it, you never do get out of the 22% bracket. And so the government, well, They hoodwinked us. Now, is there anything that can be done? Well, if you're a business owner, this is where I really want you to pay attention. I encourage you to listen to what is being said. You see, business owners don't necessarily always have profitable years. And sometimes, as a business owner, there could be a reason why we would want to manufacture a loss. It could be that we've just accidentally manufactured a loss by buying a new piece of equipment, maybe adding on to, say, a building that we're working out of, buying tools, the work, and the options would be endless as to what we could do in order to be able to manufacture that quote-unquote loss. But here's what most business owners are missing. The reality is that if I told you that it's possible to take a taxable dollar and withdraw it and never pay any income tax, would that be attractive to you? The answer for most business owners, the answer for most individual who is retired is absolutely. Well, I'm here to tell you that that's exactly what can happen. You're in a position where you can utilize the loss that you have experienced or that you have created one way or the other through your business, and it now allows you the opportunity of being able to withdraw money from that pre-tax qualified account. Again, if this is an employer 401k or 403b, which is not very likely, but if it is, just bear in mind that this won't work for you because those have mandatory 20% withholding. But if this is a traditional IRA, this is a simple IRA, this is a SEP IRA, you've got an opportunity to use that loss to your advantage. Remember, you may have gotten a deduction for putting money into the account, and the goal, the objective of the IRS is to tax you on the way out of the account. But guess what? If you've got a big enough loss that you have created with your business, you have an opportunity, a golden one, might I add, to take withdrawals and not pay any tax on that ordinarily taxable withdrawal. So this is something that we need to explore. Now, granted, today it is harder and harder for individuals to be able to take advantage of things like this because remember, the Trump tax plan, the first iteration of the Trump tax plan, one of its goals was to reduce the number of individuals who are filing taxes and itemizing. And so this is the reason why we keep seeing that standard deduction get bigger and bigger and bigger. And even right now in 2026, we know that there's very large increases and additions to the standard deduction that people are able to utilize when paying taxes. But again, if you were a business owner and you have an expense, you've seen a loss, use this, consider it as an opportunity for you to take money from that pre-tax qualified account and pay next to nothing, if anything, even at all, in the form of income tax when withdrawing it. It's something that you have as a very specific advantage because of being a business owner. So, as always, use it to your advantage. I'm Matthew Johnson. Thank you so much for listening and watching. And remember, it's up to you to make today a great day.